If you've been waiting for the housing market to crash, wait no more, because we've been on crash watch since 2019, haven't we? It was to be the crash. But then when it didn't happen, 2020, that was going to be the year. And then 2021, and then 2022, and then 2023. Now, this year, just a few weeks ago, we were told exactly when it would happen. And here we are. We've all been sucked in by the masters of clickbait for the last 5 years, waiting for a good time to jump in. Well, wait no longer. The discounts, they're here now. But where? I mean, I get it. I do housing market updates regularly, and here's what I know. The median home price in the US is up year over year, 6% to be exact, and people are confused. I mean, I see it in the comments, people telling me that the market is down and it's about to get worse, and I'm like, no, you've been misled by housing crash clickbait. Now, in these exchanges, two arguments they keep coming up. Argument number one, the housing market crash is coming. It's right around the corner. As if I hadn't heard that for the past 5 years myself. And bear with me, I'm gonna show you the info about the timing of the housing market crash in just a second. You'll know exactly when it's coming. And then argument number two is that home prices are down 25% in my market. And I say, super, fantastic news for the buyers that are there. But let's zoom out, because here's the catch. If your local market is dipping, that means another one is pumping. The median home price is up by 6% nationally. So if you're in a hotspot down by 25%, somewhere else is balancing the scales with a 31% surge. That's how they come up with the median price. All right, so when is the market supposed to crash? I mean, we've all been on the edge of our seats for about 5 years, right? If you've been listening to Robert Kiyosaki at all, maybe you've been waiting for even 10 years or so. But why? Why would it crash? Because houses are too expensive now. So let's look at that. Home prices, they gotta go down because nobody can afford to buy a home. That's the argument. And for the average person, there's a lot of truth to that. And so let's just pretend that BlackRock, Blackstone, Vanguard, State Street, all of the big institutional investors, let's just pretend that they don't exist, because they certainly aren't having affordability problems. Oh, and all of the foreign investors too. They got plenty of money. The affordability is not impacting them. But let's still just pretend that they don't exist, and we'll just play along with the nobody can afford it argument. And let's start with this. To really know when any market is going to crash, you have to understand what makes something valuable in the first place. So 1, utility, 2, demand, and 3, scarcity. And you don't need all 3 of those for an asset to be valuable. But when you do have all 3, here, it's like this. Utility, we all need a roof over our heads. Shelter, that ain't going out of style, ever. Demand, we've got more people of home buying age than at any other time in the history of the country. And then when you count the millions of people passing over our border every year, the demand is unprecedented, and they ain't going away, not in our lifetimes. And then scarcity, or supply. For the last 20 years, we've been building 276,000 fewer homes per year than the previous 50 years. So in order for the market just to get back to normal, we need to build 2.1 million homes per year for the next decade. And last year, we barely built half that. Real estate has already crashed. You might have missed it. The prices didn't crash though. The supply did. And that's not a precondition for a housing market crash. But that is what will actually cause it to crash, when there's more supply than demand. And it's funny, nobody argues the supply and demand idea when you're talking about toilet paper or Pokemon cards. But for some reason, it just doesn't land well for some people when talking about real estate. But if loads of people try to sell their homes all at once and there's nobody around to buy them, that's when you'll see the market take a dive. So what could make that happen? Well, historically, you'd see a flood of foreclosures. That means the economy, it's tanked, people are out of jobs, they can't pay their mortgages, and as a result, houses get foreclosed on and then just thrown onto the market. Now imagine that scenario hits. Remember 2008? We saw about 2 million foreclosures in just 1 year, and then 3 million more in 2009, and then 3 million more in 2010. But right now, there's just over 1 million homes for sale in total. So if we get a 3-year run of anything close to 8 million foreclosures again, the market will definitely crash, no doubt. You can't argue with that. But let's take a real look at where we stand with foreclosures right now. They're still well below pre-pandemic numbers, which were at an all-time low then. But you can see here that they're creeping up. We could hit 2005 numbers by next year, and if that trend continued as it did then, we're probably a good 3 to 5 years away from the full-blown crash everyone has been predicting. So if you believe that, then buckle up for a very rough ride in 2027-ish. But wait a minute, because there's a big but here. Let's look at where homeowners sit today. 91.8% of them have a mortgage locked into a rate under 6%. 82.4% are below 5%, 62% below 4%, and 23.5% below 3%. And then there's the equity that they're all sitting on top of, a record amount of it. One of inflation's benefits for real estate owners. Not a benefit for everyone else though. And if you jumped into a home recently with a mortgage of 7% or above and it's feeling like you maybe bit off a little bit more than you can chew, then yeah, that could be a rough spot. No sugarcoating that. But that's less than 10% of the homeowners out there with mortgages. Remember, 36% of properties don't even have a mortgage. They're owned free and clear. So the vast majority of property owners, they either don't have a mortgage at all, or they're sitting pretty with 3% or 4% rates on top of a very nice cushion of equity. They're not going to foreclosure. So then what? I mean, buying a house today is tough. Prices are really high. Nobody's arguing that. It's a rough spot to be in. But hold up, aren't interest rates likely to take a dip this year? I mean, everyone's talking about it. The Fed has all but promised it, probably in the third or fourth quarter. And this seems like good news for buyers on the sidelines, but I wouldn't expect any miracles. I mean, maybe they'll drop a full percentage point. 2 would really shock me. Maybe that's more likely in 2025. But here's the snag in that line of thinking. If interest rates go down, home prices are almost surely going up. That's just how it works. And say the rates don't change at all, they don't budge. Well, nothing changes. Houses stay out of reach for most people. Either way, it's not looking good for first-time home buyers. And you may be wondering, why is this happening? Well, you can point your finger at the Federal Reserve. Some big missteps with monetary policy were made, and it's the average Joe and Jane who are paying the price. But the market is still, it's got to crash. I mean, I see it all over in the comments, and surveys like the one from LendingTree recently show 44% of Americans are anticipating a crash this year, almost half of them, and 35% are hoping it does. But let's get real. Do you really believe the Fed's going to let the market tank in an election year? Their game plan is pretty clear. They're easing up on the monetary policy very soon. So where does that leave us? It's plastered all over the news. Wall Street Journal, Fox, Forbes, Yahoo, New York Post. It's the rise of the forever renters. It's a slow shift, but it's happening. So if you're looking to buy, waiting it out for the perfect opportunity might not be the winning move. We might not see a better time than right now. But yeah, I still can't afford it. I get it. But if you really want to own a piece of real estate and you've got 10 grand or even as little as 5 grand, you can do it. And without any extraordinary effort. I mean, across the country, there are plenty of low to no down payment programs designed to help people buy a home. I mean, a few weeks ago, I broke down 10 realistic options here in another video. It's not too late to grab your slice of the American dream before it turns into a full-on nightmare. So check out the video that I've linked right here for you. And while you do that, I'll keep the updates coming. All right, thanks for watching. I'll see you next time. Take care.